Hey everybody, welcome back to the show. Another live Q&A. We do these every other Monday. For those that have already joined, please give me a thumbs up that everything is working properly. For those that are new, so this is a chance to ask questions in the chat. I'll do my best to get to as many questions as I can. I'm not a financial advisor. I am a guy with a camera and a microphone in his basement. I think that's a fair statement. Thanks, David. I see the thumbs up. I do spend some time thinking and researching around issues of retirement planning and investing. And I've been doing it for a long time. Well, not the retirement planning part, the investing part. So, hopefully I can help in some ways, but yeah, that's how it works. If you want to ask a question, just tag me at Rob Berger in the chat, because then it helps me find it. What I thought I would do tonight for a few minutes, and then I'll get to your questions, is show you what I've been doing with AI and workflows. I don't know. Maybe you guys don't care. You can just mute it and go about your business while I go through this if you're not interested. But I find this fascinating, and I've been burning a lot of time. So I'm going to show you the first thing, and I'll explain it. So this is N8N, literally the letter N, 8N, and this, what you're looking at is a workflow, and how do I explain this? So let's go back. AI, when AI first came out in the form of ChatGPT, I think for a lot of people, myself included, it was like an alternative to Google. So instead of typing into Google, I don't know, what was the rate of inflation by year for the last 50 years, and then hunting through the different options they give you and picking one, you just put it in ChatGPT, right? Or some other large language model. So it's sort of like a Google alternative. But then as we started using it more, you realized you could do a lot more than that. Like, for example, I'll just stick with that. I could say, what was the inflation rate as measured by CPI every year for the last 15 years, and format your response in a CSV table that I can upload to Excel or Google Sheets. And, so you start to realize what it can actually do things for me. And just got a text from Matt that the sound and video are good. Thank you. And so, it could do things for you. And so that's obviously different than a search engine. But when you really start to dig into what it can do today, it's really two things come out from my experience. One is it's just breathtaking, some of the things it can do, and two, it's still really, really stupid. It can pass a test because it can just predict the next words in a sentence, and it's gotten better and better and better at that. And so you can do some great research and other things. It's amazing. But and I'll give you an example in a minute about how it just doesn't, Apple came out with a paper that says it doesn't really reason yet. And that, at least in my experience, I would say that's probably true. Anyway, going back to this screen, N8N allows you to put together workflows that combine apps. In fact, apps, like this is Google Drive, right? This is Google Sheets with, so you can send data from one to the other. Now, that's not new. Zapier's done that for a very long time. But you can then also add AI agents where, with one of the large language models, in this case, ChatGPT, it will actually do stuff for you. So in terms of these nodes, there's thousands of them on N8N. And, if we search for Google, we'll see a ton of them. Google Calendar, Google Contacts, Google Ads, Analytics. It has, let's see here, Notion, right? It has Facebook, I'm sure. Whoops. Facebook, yeah. It has all of the prominent large language models. I'm sure it has Perplexity. I've not used that for this, but yeah. So the point is, it's got thousands and thousands of apps. So I started watching a bunch of videos. I don't know a thing about N8N 10 days ago. Ton of videos and using ChatGPT and Claude to ask questions. And so I'm going to show you one thing I've put together and one thing I'm in the process of putting together, and then we'll get to your questions. So let me explain what I do before I go back to it. I keep all of our HSA or all of our medical receipts so that I can reimburse us from our HSAs, whenever, 10 years from now. So whenever a receipt comes in the past, I'd open up a Google Sheet, put the date, the provider, the amount, and a link to the receipt itself. And it doesn't take long to do that, but I don't know, it's kind of a hassle. And so what would happen is receipts would sort of pile up, particularly the ones that get emailed to us. So I'd have them in my inbox at the bottom were all these receipts. I didn't want to deal with it. And of course, as that pile grew larger, I really didn't want to deal with it. So I'm thinking to myself, I'm like, well, wait a minute. I bet AI and something like N8N can do this. And sure enough, it can. So the way this workflow works is when I drop a receipt into a particular Google Drive folder, it automatically downloads it to N8N, and this node extracts the text from the PDF. I started with a template that was free, and then I had to modify it significantly. But this extracts the PDF in chunks, not unlike how Notebook LLM probably deals with PDFs, although they're much, much, much larger. This is usually just a one-page receipt. And then this is where AI comes in, where it takes that data and uses, in this case, ChatGPT, OpenAI. I could have used Claude or whatever. And it basically looks at this data and says, okay, I figured it out, Rob. I know what the date is. I can figure that, which piece of the puzzle is the date and the amount and the provider. And I've got the link to the receipt. And so I will just dump it all into this Google Sheet for you. And it works. It's not perfect. And I have to work on a few things. I have to re-authenticate access to some of these tools, which is not hard, but I've got to go into N8N and click a few buttons. I don't want to have to do that. And if I scan a receipt, it usually doesn't work. And I'm suspecting it's because of the quality of the scanner that I have. But so that's pretty basic. All it really does is save me time, right? So then I started thinking, well, how am I going to use this for my business? And the first thing I wanted to tackle was email, because I get a ton of it. So I sent out a newsletter yesterday. I've probably received, I don't know how many emails I've received since yesterday. Well, that's 50. Let's see. I'd say I've received about 75 emails in the last 24 hours. How can I use all of this to help me process email? Now, one thing I could do, and let me see, I'll show you this in just a second. I'll say, actually I'll show it to you now. Draft an email reply to the following message I received from a viewer of my YouTube channel. And I'm just going to make sure that I don't put whoops. Hang on. Let me put the message in. Okay. Yeah, I didn't want to make sure there was no, I didn't want to put the person's email in there and show it to you. So this is all generic. So here it is. Let me see if it'll work now because I hit enter, but I've put the email in there. It has to do with, it's an interesting question. The viewer wants to know, I want to go from a 2040 fund to a 2050 fund, but if I do that, am I interrupting compounding? I mean, Charlie Munger says never interrupt compounding. Okay, so here's the answer. Great question. When you switch from a 2040 to a 2050 target date fund in a retirement account, your original cost basis in the 2040 fund doesn't carry over. Future returns will depend entirely on the 2050 fund's current NAV and its underlying asset mix. In other words, you're not losing any compounding. I mean, that's a great reply, actually. I know. Now I'm realizing you probably can't see it, but it's actually a really good reply. And look, they've even got here, all the best, Rob. So I could just cut and paste all of your emails in there, one at a time, get a reply, and of course, look at it, edit it if necessary. It might save me some time. It may, frankly, that might be a better reply than I would have come up with on my own. But of course, that's still a very manual process. And so I want to use a workflow, one, like with N8N, and I want to figure out ways where I can actually use AI to make my replies better than I could possibly do on my own, even beyond just, a nicely worded response. That's important too. This is actually a pretty good response. So I'm not done building this, but I'll show you some pieces of it, and then we'll get to your questions. Let's see here. The first thing I wanted to do was create a workflow that when an email comes in, I classify it. So, because sometimes you guys email me a question. Sometimes you email me a topic for a future show. Sometimes you email me a resource. Hey, an article that you might be interested in, you give me a link. Some people just say thank you, or, just a kind go Buckeyes. I get all kinds of emails. So I wanted to try to classify them. So I built an email classifier. And this is it right here. So when an email comes in, it triggers and it goes to this email classifier. And if we look at this, I actually have audience question, and I have a description for AI. And a thing to note about this. So it says emails from fans. By the way, I'll talk about fans in a second. And I know you probably can't read this very well, but I'll read it to you. Emails from fans that ask specific questions related to retirement, investing, or topics covered in my YouTube channel or newsletter. These often include question marks, personal situations, or requests for advice or clarification. So that's sort of the prompt I'm giving to, in this case, ChatGPT, for it to classify my emails. Now, you may say, well, Rob, you use the word fans. I mean, I think maybe you're stretching it there. Well, I didn't actually draft that. ChatGPT did. I put a prompt in there that said, you're an email inbox manager expert, and I want you to classify emails for me. I've got these 5 classifications, and you need to write a description for each of them. It came up with that. And so I have one for each of these categories. And then depending on which one, this is different options, and it'll go to my email and add the label. So that's sort of step 1. Step 2, now this is where I want to take it to the next level. I want AI to be able to access my brain. So how am I going to do that? Well, I'm going to give it access to the list of videos I've published, the titles and the URLs. What would AI do with that? Well, in a reply to an email, they might be able to say, and hey, you ask about the 5-year rule on Roth conversions. I've talked about that in a previous video, title to the video and the link. That'd be great. And in many cases, I've published almost 600 videos. I may not even remember that I recorded something, but AI will if I give it access to the list. So I've done that. I'll just show it to you quickly. Let's see. Where is it? Oh, here it is. So this is a little more involved than it may look, but once a week. So I have all my videos go into an Airtable database automatically. That doesn't involve N8N. Once a week, this trigger fires and it looks at that database and says, hey, are there any new files? And there's a way, details don't matter, but there's a way for it to figure it out. And then it uploads that data. It's not a lot of data. It's the title, it's the URL, and some tags. And it gets put in what's called a vector database. Pinecone is a provider of vector databases, which I'd never heard of a week ago. I understand them conceptually, and that's about it. But that's the great thing about this. After you watch enough YouTube videos, you don't really need to know the details any more than I don't know how a microwave oven works, but I use it every day. And so it uploads to the Pinecone vector database, which is the kind of database that AI can search really well. That's the point of it. Now, I haven't given AI access to it yet. That's because I'm still developing other aspects of it. So the thing I'm working on now, so that's, you say, well, that's, if you're trying to give them access to your brain, list of videos, I mean, it's not that much. Well, I'm going to upload to a Pinecone what they call them namespace. You can call it a folder, transcripts of every video I've published on YouTube. Now that'll be a lot of data. Then I'm going to do another folder or namespace with all of the content I've written, whether on robberger.com or the old blogs that I've taken down but still have the content, or at Forbes. I'm going to upload a copy of my book, all into a Pinecone vector database. And I will be able to use that for a lot of things. But one of the things I'll be able to do is give it to, let's just say, ChatGPT or maybe Claude as part of this bigger email agent that I'm creating, so that when it replies to one of your emails, it has access to all of that data. The other thing I'm going to give it is sample emails, not your email addresses, just a generic question that I've received, like the one I showed you, and my answer to it. I might give them a couple hundred of those. And so it'll know my writing style, for better or worse. It'll know how I think about all the topics we talk about. It'll have a list of all the videos. And I'm thinking that I call it Rob's brain, could be useful for other things too. But right now, I'm going to use it for this email agent that I'm hoping will allow me not just to be able to reply to more emails, but to reply in a more effective, a better way. There'll be the better quality replies. Now, I will be a part of that process. These will not get sent out automatically. I could do that. I could say just send it out. But the way I've got it set up is it creates a draft in Gmail. So I still have to go through, look at the draft, edit it if I feel like I need to, and then hit send. And that's important to me for a lot of reasons. By the way, part of that process, if it classifies it as someone asking a topic for future video, I'll have another workflow that takes that and puts it into a tool, could just be Google Sheets, that lists all the topics. So, it's automatically happens. Okay. I don't know so now I'm going to ask you guys a question. If anyone is still, at this point watching, let's see here. Oh, good. There are a few of you. So I will get to the questions, but I want to ask a question. I want to ask you a question. Does any of this, I'll say AI and workflows, interest you? Feel free to say no. I'll put yes, no, or I'll put in here, I'm not sure. I'll put undecided. Yeah. I find it fascinating. Anyway, enough about that. So what was the first question I was going to answer? Let's see if I can put it up on the screen. I may not have it. Oh, yeah, here it is. Whoops. All right, from John. I'm nearing retirement. I want to build cash reserves. I took my year-end dividends and moved them into a stable value fund in my 401k rather than reinvesting in them. Should I continue this? Well, so a couple of thoughts here. I take it you've kind of decided, like you said, you're nearing retirement. So I don't know what that means. End of the year, into the decade, well, probably not into the decade. But you've decided you need a certain amount of cash for this retirement. We'll just say at the end of the year. And so question one is, where are you going to want to take that cash from? Now, of course, you're talking about saving it in your 401k, which is fine. You could, so a couple of thoughts there. If you want to save it in your 401k, are you going to want to take it out of your 401k when it comes time you retire and you're going to spend it? So you could do that. Of course, you'll pay, assuming it's a traditional 401k, not a Roth, you'll pay taxes. I'm sure you know that. So that's something you could factor in. You could still save it in your 401k, but decide to take it out of a different account. And you say, well, how would that work? Well, let's just imagine the real reason you're saving this is because you're getting near retirement and you want to change your asset allocation. You want to become a little more conservative. When the time comes to actually spend the money, let's just imagine you want to take it out of your Roth because you don't want to pay taxes. But in your Roth, you're 100% stocks. What do? Well, let's just say it's $10,000 just to make up a number. Take your $10,000 out of your Roth and go into your traditional 401k, and that $10,000 that's in a stable value fund, invest it in stocks, right? You've just effectively moved your stocks from the Roth to the 401k. So if you have multiple account types and you have that flexibility, you don't really have to worry about where the cash is sitting. You could sit it in your traditional 401k and take it out of a taxable account. Sell an investment in a taxable account because you prefer the tax consequences. And let's just say it's stocks, and then take the amount you sold and go back into your 401k just to maintain your asset allocation and buy stocks there. All right. That's not really your question per se, but I think that comes up a lot as you're thinking through how you're going to manage your money and your cash in retirement. In terms of taking dividends, saving dividends in your 401k, to me, the bigger question is, are you wanting to change your asset allocation? Now, if it's just dividends, you're probably not changing it that much, right? It's a very slow process because your dividend yield might be whatever. For stocks, let's just say it's 2%. It's not a huge amount of money relative to your overall savings. So as you take that dividend, of course, if you reinvested it, it would be in stocks. But if you save it in a stable value fund, we'll just say that's similar to fixed income or cash or whatever. You're slowly changing your asset allocation. It's not good or bad, right? That may be the thing you want to do. And if that's what you want to do, that's certainly one reasonable way to do it. I often think about setting aside dividends from a taxable account into some form of a cash account because dividends in a taxable account are taxable income, right? Usually, it depends how long you've held the investment and other things, but let's just assume it's long-term capital gains. You're going to get taxed on it anyway. So if you need money to spend, why not spend it? In a retirement account, you could reinvest it, and then when the time came to take it out, there's no tax consequences one way or another until you actually pull the money out. So I just make that distinction between saving dividends in a retirement account versus saving dividends in a taxable account. Again, may not be your real question. If you're wanting to set money aside to spend, and you're going to retire in the next, let's say, year, and you want to build up a cash cushion, and you want it your 401k, to me, a stable value fund, I've never had one, seems like a reasonable approach. Dave wants to know what the ideal split at retirement is between a traditional IRA or Roth IRA and a non-qualified brokerage account. So I don't think there is one. I don't think there is an ideal split. I think it just depends on your taxes, right? Well, so let's back up. Part of it's outside of your control in a way, right? I mean, depending on your income, depending on your financial situation, you just may have a lot in taxable accounts, right? I mean, maybe you sold a business, or you inherited some money, or you won the lottery, or you bought Bitcoin when it was 11 cents, which was how much it was trading at when I started writing about it. Anyway, so you just might have a truckload in a brokerage account, right? That's not a bad thing. It's just sort of the way maybe things worked out for you. Or maybe you have a lot in traditional because you made too much money to contribute to a Roth, and maybe you did or didn't do a backdoor, and yes, there are conversions. But I don't really see it as an ideal split. If there are some things you can control. So if you have a traditional, obviously, you can do a Roth conversion. To me, the analysis of that, at least in the first instance, is not what should be the allocation between these account types. I don't think it's irrelevant, but to me, the starting point are the tax consequences, right? Does it make sense from a tax perspective to do a Roth conversion? And if so, how much? That to me is the primary driving question. Having said that, I think a lot of people, and I'd put myself in this category, you do that analysis as best you can. And when you're done, you're like, it's kind of, I could do a Roth conversion or not. It's not, there's no clear cut answer. But it probably wouldn't hurt you, and it might help you. That's kind of my situation. It's probably not going to hurt us, might help us. In that case, I do consider how much we have in a Roth, which is very, very little. And for me, that really kind of, I probably would have done the conversions this year anyway, but that really kind of was the icing on the cake. Because I really do think we could benefit from more Roth money. But again, for me, the primary driving factor, Dave, is not how much percent is in each of these account types to begin with. It's purely driven by tax questions. Now, as there could be a sort of an indirect kind of way to think about it. As your traditional accounts go down, your RMDs, your future, let's assume you're not taking RMDs yet, but your future RMDs go down, or at least they might. I actually got an email or saw a comment somewhere where someone was saying, I keep making Roth conversions, but my traditional account keeps growing, and it's higher than it was before. But in any event, if you do a lot of Roth conversions, your traditional accounts could get smaller, and your RMDs could go down in the future, and that in turn could make future Roth conversions look less appealing. But again, that's a tax question, right? That's not a allocation between the different account types. So I think it's an interesting question. You guys might have a different view of that. But that's my, I have to answer these things off the cuff. I don't have time to think about these things. It's not like you guys send in your questions in advance. All right. Well, sometimes actually you do, but those are the emails. Yeah, those are 5 Question Friday kind of situations. Paul wants to know, who are my favorite financial-oriented show personalities? What attributes do you like about these individuals and their shows? So I'll let you in on a secret. It's not really a secret, but I don't really watch other financial YouTubers or if I do listen to podcasts, particularly when I walk, and I listen to all kinds of things. I'll tell you some of my favorite podcasts. I'm going to see if I can pull up my podcast app. I don't have my phone down here, but pull it up on the old iMac. See if I can get to my library. Maybe not. So I know I like Rite of Passage. That's funny. I don't know how to actually get to my library. Oh, here it is. No, it's not. I know how to on my phone. Oh, here we go. So I'll just show you this. It's how I write, I guess. It used to be Rite of Passage, I thought, but David Perell, he interviews some great guests. He had Dean Koontz on. He had Ezra Klein on. Those are 2 that just come to mind. I guess he's got this one with Stephen Pressfield. That's funny. Up here is the Rational Reminder podcast, but I don't really listen to that very often. I like that one. I'll listen to value investing podcasts, but there aren't. There's one. I think it's called Behind the Balance Sheet. Is that right? I may have the name wrong. No, that's right. Was Stephen Clapham? I don't know who that is. I listen to this. I like this podcast. So it's financial. I really don't watch YouTube financial shows. The Money Guys, I think probably I would like, but I don't listen to really any of them. I'm more focused on like programming, note taking, how to use Obsidian, than I am financial shows. Yeah. So the chat or the Q&A, 59% say you're interested in it, 20 say no, 21's undecided. I don't know if I'm going to do this. But, I have a separate YouTube channel that was part of Dough Roller that I think it's got about 11,000 subscribers, and I haven't posted a video there. I'm thinking about sort of turning that into a tech-focused, sort of tools-focused thing. I don't know. I don't want to start going down the road and then feel like I've overcommitted myself. That's the thing. And that's the kind of place where I would dive into what I showed you and how I build it. Of course, I'm a novice and still learning, but that's okay. Matt, who is family, I should tell you all. In fact, we were together for Father's Day yesterday. Was it yesterday? Yeah. What do you feel are the most important factors in achieving the kind of retirement you want? It's a great question. Well, of course, one would be financial resources, which means you've got to start saving early. The earlier you save, the easier it is to reach those goals. But the thing I'm learning about retirement, two things that I didn't really think about, but having a purpose in retirement, for me anyway, is really important. That's why one of the reasons this show is important. I feel like I can be helpful to people. And I do things like the programming, the things I showed you that keep me mentally engaged. I like to read. I like to play chess. But I think, what interests you could be totally different, of course, but I think you need that. I think physical fitness is critical. I mean, it's critical at any age, but as you're aging, and it doesn't have to be the kind of stuff I do, like in the gym and yoga, and it could be, just walking. Probably needs to be some resistance training in my opinion, but And then the other aspect is you got to have social interaction with folks. Now, a lot of that can be family, which is probably true for me. But those are the important things in my mind. Staying active mentally, physically. Yeah. Jonathan wants to know if AI is real. Oh, it's real, buddy. It's real. I'll show you something that I learned. I'll do an experiment. We'll see if I can get this to work. We're going to use Bolden as a guinea pig. We'll see what ChatGPT thinks. So I'll show you this in just a second. I got to pull it up. So here's Bolden. This is a demo account. And let's see, I've got a different keyboard, so I'm not sure what I'm doing here. Okay. So you can do something like, I'll just do this, but let's imagine you're using some program, you're on some website, you're doing something and you get an error, right? I'm going to screenshot that, right? Now, give me a second. I got to put this into ChatGPT. See if I can do this quickly. I'm not used to using this computer. So the way I did it, by the way, so that's right here is the screenshot I just took. You just click this button. You can upload from apps. You can upload photos. And I'm not even going to ask it anything. I'm just going to submit that as my prompt. Let's see what it does with it. Maybe we need to get off of 4.0 mini. I don't want to do 3.0 because it might take too long. While it's processing, like when I'm working on N8N and I get an error, I just screenshot it and I put it right into Claude or ChatGPT, and it tells me everything. It tells me what the error was, why it occurred. It doesn't always get it right. Thanks for sharing the screenshot from Bolden, formerly New Retirement Dashboard. Here's a quick summary and a few insights based on what I see. Net worth, projected, blah, blah, blah. Lifetime debt. Oh, some issues. Additional insights, next steps you might consider. And then you could get more specific. Like I could screenshot, I could come in here, go to accounts, pick up an account, and we'll just do this. And we'll do here. I want to screenshot this, right? And I'm going to add that. I'm going to take it off just because it shows, not that it matters, but it shows my Finder app. So, okay, I've screenshotted that. And here I could say is, help me figure out what to set my, I'll say, assumed rate of return at. I'll end in a preposition. Why not? It's ChatGPT. What do we care? By the way, don't bother correcting spelling mistakes. I don't think I had any there, but it doesn't need you to correct the spelling mistakes most of the time. Now, I don't know how helpful this will be. You could go to like a 3.0 model and maybe get more. But, this is all from a screenshot. Anyway, it's breathtaking. I told you that it can be stupid. I didn't tell you why. So I'm trying to, I wanted to get the YouTube videos into N8N, which is easy to do. There's a YouTube node, download the video. And then I was going to use a tool called Assembly AI that would create the transcript off the video. The problem was my videos are too long. The file sizes are huge. I know, I talk too much, whatever. So I'd get an N8N error and then a Google Drive error, and so I'm into ChatGPT. How do I figure this out? And I said, look, the file's too big. I can't download it. Here's the problem. I screenshotted, and they said, oh, just grab the URL out of Google Drive, because I have these videos in Google Drive. Just grab the URL and you can send the URL to Assembly through N8N. Oh, great. The error, no, they won't accept the URL. So I say, oh, sorry, that didn't work. What else can I do? Oh, well, just download the file into N8N. I type in, I just told you I can't do the file. It's too large. It responds, oh, well, just use a URL. The URL doesn't work, but just use the file. And it was just back and forth and back and forth. Yeah, I was going crazy. So then I had to stop. It's like, okay, AI, you're out. And I just sat there and I thought, And then I said, well, Rob, why are you trying to upload the video? You're trying to create a transcript. Transcripts come from the audio. Just strip out the audio. It's much, much smaller. So now I'm trying to figure out how to do that. All right. By the way, I can do it manually, like with, cut and paste and put it into a tool. That's easy. Okay. Trying to get it to work in N8N has been challenging, but I'll figure it out. Okay. I feel kind of fired up today, and it's not even football season. It's not like there's Monday Night Football and ManningCast on. By the way, Bill Belichick apparently is not going to be on the ManningCast, and I want to say thank goodness. He was terrible. It was like, what's he doing on the show? It didn't add anything. My opinion. Anyway, all right. This is interesting. So Norm wants to know, how do you prompt AI to calculate the optimal financial strategy regarding retirement and Roth conversions? Yeah, that's going to be tough. But one way to think about that prompt would be to get, let's put this in. I'm going to change the, let's try something. I'm going to change the reasoning model to O3. I think I called it 3.0. So the whole naming convention here, and even OpenAI has agreed, it's terrible. They need to ask ChatGPT how to name the models. Anyway, I'm considering doing some Roth conversions as part of my retirement plan. I was going to make something up. I'm 60, plan to take Social Security at 70. I'm retired. I have 1 million in a traditional IRA. So one thing you could do, let me take the message down. There we go. You could ask it something like, well, should I do a Roth conversion and how much? I don't think you're going to get much useful there, but you could say, please list out every factor I should consider in making this decision. By the way, all right, we'll try this prompt, and then I'm going to show you something else. We'll see what it does. It'll take a minute, so we'll go on to the next question. All right. Yeah. What I like about the O3 model is it tells you what it's thinking as it does it. All right. What's next? So Rick asks, do you think that a portion of the increase in stock values, as kind of measured by PE over the years, are partially attributable to increases in demand from 401ks and IRAs and overall population growth? Well, I've actually been thinking about that question. I don't have an answer, but I'll just give you my thoughts. One is, I certainly do think population affects markets for sure. And is the population growing or declining? I mean, that certainly, was a factor after World War II. And so I think that's a factor. I think, the secular decrease in interest rates, the sort of a regime change that occurred in 1982 and has lasted, we've had, ups and downs in the last couple of years, although still rates are, historically still, reasonably low. I think, because as rates go down, asset values go up. So I think that's been a huge tailwind. I also think, and this is something I've been studying a bit. I haven't reached a conclusion, but I think this is possible, that a lot of the high PE stocks are, as we know, are tech companies, right? And that's been the case for a while. And there are some interesting accounting issues there. Because under GAAP, if you think about a value company, a railroad, or, a utility, or, these old stodgy, companies, some energy company, if they want to make money, what do? They invest a lot of money in stuff, buildings, equipment, manufacturing facilities, railroad tracks. And these sorts of things get added to the balance sheet and expensed over time through depreciation, right? So you spend $100 million on a plant, that doesn't hit your income statement that year. Most of it doesn't, right? It gets they call it capitalized. It's a fancy word for stick it on the balance sheet as an asset. And then what they do is they depreciate it over some number of years. It's all determined by GAAP. Well, there's tax depreciation and then GAAP, and they can be different. But and so every year the value on the balance sheet will maybe go down by whatever, a couple million, whatever it might be, and that same amount then shows up on the income statement as an expense, which of course lowers your net income, right? But with technology companies, they may have some of that, of course, but what do they have? Research and development, right? What's going to make NVIDIA a lot more money down the road is if they come up with some really new stuff in their chips. Now, so we say, well, okay, they invest $100 million in research and development. It gets on their balance sheet. No, it doesn't. In some cases it does, but in many cases it doesn't. It gets expensed right away. And I heard an interesting analysis. It was actually on that Beyond the Balance Sheet podcast, I think, about an investor who bought Netflix back in the day. I think they've since sold it. They run some sort of fund, but they did this analysis and said, advertising costs get expensed in the year they're incurred, but they actually add value. The average customer at Netflix is worth X dollars and stays with the company for X years or Y years. And so the point being that the PE was inflated, or at least if you tried to compare it to a value company, an old stodgy, energy company, you were comparing apples and oranges. And so they would do adjustments to try to compare it, and they would find that the PEs weren't really as high as they seem to be. Now, by the way, I'm not suggesting that the high PEs are because of that. I wonder if it is a factor and to what extent. I don't have an answer for that. But Rick, you wanted to know. I actually think about these things from time to time, and that's my thought on that question. Okay. So here's, I'm not going to read it all, but I mean, they give you current tax picture, future tax landscape, interaction with Social Security and Medicare. Obviously, you would want to triple check all of this, but this could give you a list, things to consider, and it's a pretty detailed list. So the other thing you could do is I'm gonna take this, I'm gonna copy it. Hang on for a second. Okay. What I'm gonna do is something different, but this is equally important to know. I'm considered a blah blah. I'm retired. Instead of asking it to list out the factors, here's what I want it to do. Please create a prompt for me to use to help me determine a Roth conversion plan. So I'm not asking it for the answer. I'm asking you create a prompt. I'll put AI prompt, but I don't think I would have to. But it's trying to fix my mistakes. Okay, we'll come back. We'll see what kind of prompt it comes up with. That's another thing, asking the AI to generate the prompt for you that you want to use with the AI to come up with, some information. Josh notes about making the markets more efficient, and he points out the article one of the articles I mentioned in the newsletter about Perplexity AI using SEC and Edgar data. It's interesting. It'll be interesting how much like the retail investor uses that sort of thing. I think for the large institutional investors, hedge funds, by the way, they've done that a long time ago, right? Yeah. They're coming up with their own in-house tools. How effective they will be, I mean, but they're no doubt investing a lot of money in AI tools to get information and process information. And you think about all the different sources of information about a company you could get, news articles, anything the CEO says, all the earnings calls, and the kinds of, of course, all the filings. You could get data on their industry, right? and just chunk that all into a vector database and go at it with question, and a lot of this can be automated. I mean, it's really just a question of imagination at this point. So Thomas wants to know if there's been any talk of a meetup. I'm in Alexandria. No, there hasn't been, but I'm happy to do a, informal meetup somewhere. It won't happen until probably late to end of July at the earliest. But yeah, that would be fun. I talked about like a more formal thing, like where we all come together. I haven't made any progress on that. So UK wants to know, if one has enough money saved for retirement and you got a couple more years to retire, where should the money used to invest monthly go? So in other words, you don't need to save any more money. What should you do with it? I mean, well, if you're going to invest it, like obviously I can't tell you how to spend it. I don't think that's your question. I mean, spend it however you want to spend it. But if you want to save it, but your question is, how should I invest it? Or maybe you mean the account type. I'm not sure. In terms of how to invest it, the first question I always ask is it long-term or not? When am I going to need it? Maybe I don't feel like I'll need it at all, and I'll give it to charity or my kids when I die. If that were the case, it would be heavily in stocks for me. Obviously, if you talk about account types, if you could continue to invest in either a traditional or Roth retirement account or a taxable account, this may not be your question, but I'll answer it anyway. Again, it comes down to a tax question, right? And your tax situation, I think. And since I'm assuming you don't need to spend the money, that's not a factor, right? So I don't know if I helped you or not, but that's my best answer. All right, let's see what, so below is ready to copy prompt. You can drop into ChatGPT or any capable AI planner. Just fill in the brackets. And there you go. That's a prompt. I'm just itching. Okay. You should let me copy this. Do I have a copy button? I don't want to copy that. No. Okay. We're gonna do this. Let's do this. Let me get this into. I want to do a new chat. Actually, I'm gonna do it in Claude, and that way there's no memory. It's just totally fresh. So let's see what we've got. Why is Claude being slow? Oh, here we go. So let's see. Help me decide on a Roth conversion plan. Here's some data that may be relevant. And I'm going to copy it in there. And now I've got to, taxable account balance we'll say is 500,000. Annual spending need after taxes today, I don't know. We'll say it's 75,000. Guaranteed income. These are all good questions. We'll say is per year. We'll say is 36,000. A desired legacy. The kids don't need anything. It's going to give them a big fat goose egg. State DC. It's interesting. Effective tax rate. We'll say is 6%. Current and future marginal tax. Well, I don't know. Oh, this is today. We'll say we're in the. I don't know. I don't even know what the brackets are. 24%. And we'll say 24. We'll say they're not going to change because they're not. I don't think. Affordable tax bill you're willing to pay each year for conversions. Oh, that's an interesting question. Let's say I'm willing to spend $20,000. My goodness, real return assumption after inflation. Well, like after you give all this, I mean, I could figure this out. Nominal. Oh, so in other words, 8% minus inflation, we'll say 5. Inflation assumption, well, I mean, you should be able to figure that out. It's 3. Life expectancy, okay, we're going to live to be 95. I'll say no, just because that's going to complicate QCDs. Important, but I don't have a desired balance, so I'm going to get rid of that. Big ticket expense next 10 years. I'll just say no. IRMA brackets. I'll say I don't care. ACM premium credits, ACA, I'll say no. Important. I mean, they're asking all the right questions. Risk of future, that's interesting. I'll say it's high, which is going to probably skew it towards conversions. Current 24% tax. We might put Bolden and Projection Lab out of business. Just kidding if you guys are watching. All right, we'll see what that does. We'll give it time. All right. Well, so Marissa, I guess I'm kind of sad that if I email you, it might be just ChatGPT responding. Well, that will never be true, right? Because, like I said, they call it a man in the loop or person in the loop or something like that. I'm not removing myself from the loop. My hope is it can generate answers better than I could because it's going to have a better memory about things I've said and videos I've published. But yeah, I'll be in the loop. Jonathan says a namespace has a technical meaning in object-oriented programming. I'm sure that's true. In my case, it means a folder. Kat says, I love how excited you are about this. Yeah, my wife thinks I'm kind of crazy. I don't blame her. We go to this acupuncturist, and I was there today, and she, before she sticks needles in you, she wants to know how your week went. And I started, talking about this, and I went on and on for like 15 minutes. Aaron asked, Aaron's got a 401k and a 457. Is there any advantage to contributing to one or the other? So I've never had a 457. I do think one thing, so I have to claim ignorance. Two things come to mind though. One would be investment options, right? They could be different and one might have better investing options. That's probably I would think that a pretty significant factor. By the way, this is what Claude is doing right now. It's writing a program. I don't even know what's happening anymore. Okay. The other thing that I would at least think about is, are there differences in how you can get money out of these two? Like either when you retire, when you leave the job, conversions, Roth conversions. I just don't know. So that's my answer, Aaron. I'm laughing, not at that, but at what Claude just came up with. Is this a tool that maybe I could put this on my site? Interactive artifact. That's what they're calling it. Look, they move a little bit when you hover. Oh, I can select things. I don't know. I think retirement planning software eventually. Of course, you'd have to check all these numbers. Boy, the numbers get big. I like it. Oh, bracket stuffing opportunities. Well, we've even got emojis. Yeah. I won't spend time trying to study this now, but I will definitely look at that. Maybe I'll do a video just on that. I'll analyze it. Oh, I realized you didn't see the whole thing. Let me take the comment down. Yeah, there you go. I mean, you have to admit I don't know how accurate or relevant the numbers are. Maybe they're complete gibberish, but I don't know. I think it's amazing. Okay. So this is an interesting comment from Honey. He says, just hire an student intern as your assistant. No AI needed. I would look at it differently. I would look at it, an intern might make sense, but why not also use AI? Won't it make the intern better? See, I think the mindset I'm trying to come up with is not AI versus a person. It's AI and a person. There are some things, of course, that AI and workflows can do without us, but those are things that, like moving a PDF receipt into a Google document or a Google Sheet document. Yeah, back in the day, you'd have a secretary, an administrative assistant, or something like that, or in my case, me. That kind of thing. But in terms of real substantive work, to me, it's AI and people. Yeah. I want to figure out how I can leverage AI to better understand investment decisions, both individual stocks that I might purchase, but even, Boglehead kind of investing. But I got to get the email agent done first. Then I turn to content and research. Which is where I'll spend the vast majority of my time with AI and workflows, figuring that out. So yeah, this whole thing about Rob's brain, I probably will create something that you guys can query. I mean, it could just simply be a custom GPT, right, with all of that data. The way I'm setting this up, there are costs associated. When you use their consoles like this, I pay for their, I don't know, $20 a month or whatever for their pro plan, but I can put as much stuff in here more or less as I want. When I start using workflows, like I showed you, I'm using their APIs, and that costs money. But I mean, for the kinds of things I'm doing, it's pennies. I like this, Dan. Tell me how to die with zero. Rob's bot brain. Die when you hit zero. I want to write a book that says die with millions. Die with zero. I don't like that book. There are aspects of it that I get, but I've got it, by the way. It's back here somewhere, or somewhere in maybe it's in the other. It might be in my other bookcase. Let's see. One thing about, and I'm reading some questions more about this AI stuff, that I'd like to see is AI totally baked into tools like Bolden and Projection Lab. I think, the issue is privacy, I suspect. But I would think there would be a way to interact with an AI with data that didn't include personally identifiable information. That shouldn't be that difficult. Yeah. But we'll see what folks behind those tools come up with. Sonny wants to know if I've thought about copywriting automagically. I don't know, but I really like saying it. Okay. Do I still have that? I still have that poll up. Let me take it down. Numbers haven't changed. What else should I ask you guys? We need to come up with another poll. How many jobs will AI take over the next decade? And I'll say none. That would mean you could think of it. I should say net jobs. So it could take some jobs, but it could create some jobs. So it's a wash. We'll say none. And I'm thinking the United States. We'll say 10%. I don't know. What else can I do here? No, we'll say 1 to 25%, and then we'll say 26% to 50. No, it's not gonna be 50. That's silly. We'll say 1 to 10%, and then we'll say 11 to 20%, and then I'll put in here 21% plus. See what you guys think about that. But obviously a big topic. How do you think about rental properties as a method of managing sequence of return risk prior to taking Social Security at age 70? That's from Kevin. Great question. I used to own with a friend, 5 single family homes. And they were great investments. I don't own them anymore. I sold 1 or 2 of them to him. He still has, I think, several. But they were a good investment. The thing that people like about rental properties is that, unlike, let's say stocks, you have at least more control. You don't have complete control, right? You can't control the economy and recessions and other things that can cause rents to go down even, or stagnate or whatever, and things break and you got to deal with it. But you certainly have more control over rental properties than you do Apple, if you own shares of Apple. And you can invest some sweat equity if you want to, which can be a good thing. There, of course, a lot of work. So I think if but I don't really see rental properties as per se addressing sequence of returns risk per se. It's another investment. If we have stagflation, right? Inflation's high, you might not be able to raise rents. You may have trouble renting a property in a stagflation environment. Now, I'm not suggesting that's going to happen, but when we think of sequence of returns risk, the worst sequence was because of stagflation, right, in the 70s. And I'm not sure that rental properties would necessarily protect you from that. Of course, I guess it depends on the specific property. Maybe you own some properties that might do really well during a stagflation economy. I don't know. I think, if you've got properties and you've had them a long time, you know the market well, they're consistently generating cash flow. I think from a planning perspective, they can be, a pretty good, obviously a really good investment. But, your cash flow may or may not keep up with inflation, which is ultimately what we're talking about in part, or at least in part, with sequence of returns risk. If stocks go down, right, and you want to sell some of them, you're kind of stuck, right? You think of real estate and you think, well, yeah, the property values might go down, but I don't have to sell, right? With stocks, we kind of think of it as if they go down, we might have to sell. We don't like that idea of selling low. But of course, there could be circumstances where you have to sell a rental property in a bad market, right? It can happen. So I guess what I'm saying is I don't really see rental properties as some special way to deal with managing sequence of return risk, in my opinion. But I think they can be excellent investments and an excellent part of retirement and a good, nice source of steady cash flow. And you get great tax benefits. So I think they can be a great part of a retirement portfolio. Yeah, I'm pretty sure that's what I think. If I had Rob's brain work and I could just ask ChatGPT. All right, let's see where we are right now. Whoops. How many jobs will AI take? Only 3% say none. 22% think up to 10%, 45% think up to 20%, and almost 30% of you think more than 21%. I'll let that run. The thing about that kind of reality is that we can look in the past, and technology has cost jobs and often job transitions, really, right? I don't know if I told the story on the live show, but maybe I told it to a friend. But one day, this is years ago, I was talking to my mom, and some area code came up, and I didn't know where it was, and she blurted out, "It's whatever, Grand Rapids or something." And I'm like, "Mom, how in the world do you know that?" She was a telephone operator. I didn't know. We don't have those anymore, at least as far as I can tell. They have them in John Wick movies. I think they have telephone operators in John Wick, but that's not really our reality, although really cool. So yeah, outside of the movies, I don't think we have telephone operators. We used to have elevator operators until they went on strike in New York, and people were huffing and puffing, climbing 20 and 30 stories. And then they stopped halfway up and said, "Why do I need someone else to push a button for me?" So they lost their jobs. It happens. But in all seriousness, If it happens to you, it can be incredibly painful, right? And how it's going to play out, I don't know. My answer, if I were taking this poll, would be I don't know. I didn't actually make that an option. But when I say that, I mean I don't even have I can't even guess. I don't know what I would guess. Peter wants to know if I think the big brokers will create built-in AI options that allow us to set up auto dollar cost averaging or rebalancing. Well, they could set that up without AI. You don't really need AI for that, in my view. But they don't, and I don't know why they don't. Because there are, well, you can do dollar cost averaging. You can set up recurring investments, and they're like M1 Finance has that better. So it's out there and it's doable. And there are institutional or professional tools that advisors would use for rebalancing. I don't know why they've not made it available to the regular folk like you and me. Maybe they're concerned about liability. I don't know. Like if something goes wrong, it could just create disputes. I'm not sure. But the technology for that is that would not be a problem. I mean, it exists. Brian didn't specifically direct this question to me, but it's an interesting one. He has a significant lump sum to invest, 7 years from retirement, been waiting until the July tariff deadlines expire to invest it to see if there's a large drop. Wait, question mark. So, longtime viewers of the show know I don't really invest with that kind of thinking in mind because I've just found that I'm so bad at getting these predictions right. Like the things going on in the Middle East, and yet oil is down and the stock market was up today. That makes no sense to me. I mean, I understand the rationale as reported in the press. Namely, they think it's going to be contained and, maybe we'll get to some sort of resolution. I'll put resolution in air quotes, but, I can't predict what's going to happen tomorrow. So I've just, by and large, taken prediction out of the equation for me. But I don't think, if you're getting close to retirement, you're really nervous, you want to wait, I wouldn't be telling you to do anything different. People want a dollar cost average because they just feel more comfortable doing that. I'm all for it. Go ahead, do it. And it may work out for you, maybe better. Maybe you'll wait until July. You'll be glad you did. I don't know. But if you're asking me what I do, I'm just a terrible predictor. Zoot is finally in live, watching live. Welcome. This is impressive. Frank has built a 30-column spreadsheet for retirement, which includes a breakdown of all taxes for every type, an input sheet with 50 input variables. Great hobby. That's impressive. Oh, okay. Here's a recommendation from Ed. Diary of a CEO. I think I've heard of that. I don't know if I've ever listened to it. It's a YouTube channel too. Maybe I have. I have listened to some of these. Here it is. I'll show you. This is the YouTube channel. I have listened to some of these, and it is very good. 10 million, almost 11 million subscribers. That's just a few more than I've got. Yeah, I've listened to that. I don't listen to it regularly, but I'll subscribe to it. Okay. Well, this is an interesting question from Just B. Thoughts on VWINX? If I've got the ticker right, I own shares of that in my traditional retirement account. If it's the right one. Pretty sure it is, but oh, no, it's not. It's close. This is Vanguard Wellesley. So, I mean, Vanguard Wellesley has been a great fund for a long, long time. It's an actively managed fund. I'll show it to you on the screen. I've never owned it, but Here it is. It's an actively managed fund, but it's only 23 basis points. So it's like 1/4%, a little more than you'd pay in an index fund, but certainly as actively managed funds go, very cheap. The key here is does it have the asset allocation you want, which is basically roughly 60% bonds, 40% stocks. The stocks show up on the value side of the equation, which they've underperformed the last 15 years, but one could argue that suggests they're going to outperform coming up. I guess we'll see. But I mean, it's got it's one of the oldest funds available, maybe the oldest. Wellesley, and then there's Wellington, which is a little more stock heavy. Again, I don't own it, but it's done well for a very, very long time. And I could have picked this. I guess I don't remember the ticker. I'm terrible at the mutual fund tickers because they're 5 letters. With ETFs, it's usually 3. But mine's a slightly tilted a little bit more to fixed income because it gives my overall portfolio the right asset allocation. But I mean, you can't argue with the results of that fund. It's done well for a very long time. Josh asks, is the widow's penalty tax situation a good enough reason to do Roth conversions in case one spouse goes early? So for those that are wondering what this is about, when a spouse dies, if the surviving spouse doesn't remarry soon, we know one person that I think they got remarried like within a year. But in any event, you go from a presumably married filing jointly, let's assume, to a single filer. So your rates, the income cutoffs for each rate, come down. So you end up paying higher taxes. So is that a good enough reason to say, well, we're both alive now, but likely one of us will, pass before the other. And if we can assume that, maybe it makes a Roth conversion a little more attractive. I think it's a valid consideration among many. But of course, there's no guarantee. I don't know that unless one spouse had some serious health issues, I don't know that I would rely on that by itself to justify a Roth conversion, but it would certainly be a factor. I know a couple that the husband just passed earlier this year, but they're both like 95, and so you just never know, right? And this, again, the surviving spouse, maybe they don't remarry right away, but maybe they get remarried in 3 years and they're back to married filing jointly. So, I think it's a factor, but I think it's just one of many. That's my take on it. And it's a soft factor. Like, it's not like you can put it in a calculator. I mean, you can model, right? You can do this in Bolden or project. Well, probably Bolden would be better for this. You could model a spouse. Maybe you could do it in Projection Lab. Yeah, you can do it in Projection Lab. In fact, I think they just added some features about that because a lot of different things change, right? It's not just Roth conversions and taxes. You lose one of the Social Security checks, the lower one, right? Is another example of a change. You might lose some or all of a pension. So your expenses will probably, go down some. How much could vary from situation to situation. So there's a lot of other things that sort of come into play. But it's a factor. So at retirement, is your Roth account invested only in stocks? So in our case, it is. But remember, our Roths are like 1%. I mean, it's such a small amount. We are starting Roth conversions this year. But yeah, we'll have all 3 account types. And so I have plenty of room, say, in the traditional retirement accounts to hold the fixed income we want. So that's where it goes. So everything else is stocks. So basically, we've got 100% stocks in the Roth, and that won't change. I guess if we got to a point where we converted 100% of our traditional accounts, I'd have to figure out where to put fixed income, but that's not going to happen. So it's 100% stocks and Roth. in our taxable account, it's all stocks plus cash. And the cash is basically money we're going to spend this year and emergency fund. And then a mix of stocks and fixed income and traditional. That's what we do. Yoga. Favorite position is crow, LOL. I don't even know what that is. I do Bikram yoga. It's intense. If you want to know what I look like doing yoga, just imagine a 2x4 trying to do yoga. That's what I look like. Okay. Well, let's see how the question's going. It's 8:15 already. All right, I'll end the poll. Most of you think it's going to take 11 to 20% of the jobs. That would be a massive disruption in the economy. Massive. I don't know. I don't think it'll take that much. If I was forced to guess, I would probably say 1 to 10%. Of course, I'm not good at guessing, so there's that. Let's see. Lee says the problem with AI is Lee sees it, is it gets things wrong. It can be easy to miss. Yeah, it's true. And what I found is that in terms of information, using AI, where I find myself being the most effective with it is when I'm using it for things that I know. What I mean by that is, when I'm using it for N8N and this stuff, I'm still learning that. So like it tells me to do something, I just do it and it works or it doesn't work. Now that's going to change over time. But when I'm doing research, let's say I'm doing research on withdrawal strategies, 4% rule. I know when it says something dumb. I know when it says such and such a paper was written by Blanchard and it wasn't. It was written by Bengen, or they thought it was written by Bengen, and I know Kitces wrote it. So particularly when it comes to that kind of informational research, I do think it's helpful when you have some level of understanding. When it spits out some code I should stick in a code node in N8N, I'm not going to take the time to figure out what that code is. Now, of course, I'm just doing stuff for me. If I were doing something that I was going to put out there as a product, obviously I would hire a programmer to help me and we'd do testing and you do all that sort of thing. And I'm also not running code in a context where it could do any damage. So there's that too. But yeah, it does definitely gets things wrong. I created a calculator. In fact, let me see if I can show it to you. I'm going to put it up on my website. Let's see here. It's not showing up here. Oh, I'm in the wrong account. I have 2 accounts, which kind of drives me crazy. Let me see if I can get into the other one real quick. If I can, I'll just let it go. It must be this account. I created an RMD calculator. Well, Claude did. I am going to test it before I put it up on my website. But the idea behind it was you could calculate I'll put RMD in quotes, at any age, and where that might be relevant. Yeah, I'm having trouble with it. I won't be able to show it to you. Yeah. But I'll have it for you soon. But if you wanted to use RMDs as a way to do a withdrawal strategy, or just to sort of check your planned spending against what it would be if you took an RMD for all your accounts, not just traditional at age, whatever, 64, right? Of course, you could look it up in the tables, but that's a pain. So I've created this calculator, or Claude has, that I can't show you at the moment, but I'll have it for you. Hopefully I'll get it done this week, and I'll put a link to it in the newsletter. All right. Man, I can't believe it's 8:20. See, I start talking about AI and time just flies. Carlos wants to know, I'm 58, I want to be more aggressive to catch up. That's always tricky. Does it make sense to invest exclusively in index funds, S&P 500, mid, small cap, international, without bonds? Well, so I think here are some questions that I would consider if I were in your situation. First is, when am I going to retire? How long do I have to invest? If I think to myself, I'm going to work until I'm 75, I probably personally wouldn't put it 100% stocks myself, but I might put it 90-10 because I've got a long time to go. If I were going to retire at 62, maybe the answer is you can't. I don't know. But I personally would not be 100% stocks with 4 years to go before retirement. I just think that's too risky. The other question I would ask, I think an important one, is how much will you put in international stocks? I've been preaching that we should be in international stocks even when the U.S. market was clobbering international stocks. This year, the international stocks are doing better, but who knows how the year will finish and who knows what next year will be. But I do think it's an important question. And I'm probably around 20%. And I kind of think I want to goose that up a little bit, but I'm not in a hurry to do it really. But so the big question, Carlos, that I think needs to be answered is, when will you need this money? How long are you going to work? And, I think I would be starting to reduce the risk, meaning the stock exposure, at least 5 years out from retirement. I think one could argue for a little bit longer and maybe a more gradual change in your portfolio to more conservative. Of course, part of that question also depends on the question of, or the answer to the question of, what do you want your asset allocation to be when you finally do retire? The answer to that question, I think, turns a lot on how much of your savings will you need each year in retirement. Presumably, you have some guaranteed income, at least Social Security, maybe a pension. And I would even fine-tune that question. I would take the question, how much of your retirement savings will you need, say, each year in retirement or the first year in retirement? And I would refine it to say, how much of your retirement savings will you need the first year in retirement for necessities? Because that's really, if things come apart, the wheels come off, the economy, the market, and you have to cut spending to the bone, what does that look like? I used to call that my doomsday scenario. I'm not joking. I had a doomsday spreadsheet. Market drops by 50%, house value drops by 50%. I lose my job. The dog runs away. Our dog that we had then, she would have never run away. She would have survived. She couldn't have survived in the front yard for like more than 4.5 minutes. Anna, if you're listening, you know it's true. Okay. What's next? Richland says, I saw so many videos out there saying US dollar buying power has lost 90% over the years. And yet I see other countries facing the same issue. How do you quantify this? And is USD in trouble? Well, when you say the US dollar has lost buying power or purchasing power, all that really means is there's been inflation, right? Prices have gone up. In the US, inflation overall has been very modest. I mean, obviously in the 70s, early 80s, we had a spike in inflation, but worst case was what, 10, 12%, something like that. We had 9% or thereabouts following COVID. But I mean, historically, inflation in the US has been very modest. Think Germany after World War I. I mean, my goodness, talk about an inflation nightmare. So I don't really see that as a problem. It's true that we've had inflation, which means the purchasing power of dollars has slowly, most of the time, gone down. And when you look at it over a long period of time, it's, I mean, let's ask ChatGPT. I'll change the model. We'll go to 04 Mini. We'll do a new question. How much did the average house cost in the U.S. in 1962? See what it says. And but the point is, I mean, prices have gone up, but that's one of the reasons. $18,200. That's one of the reasons you generally don't hold a lot of money in cash. That's where I've never understood the argument that you should have gold. The argument I often hear is because cash gets devalued and gold keeps pace with inflation. But my response to that is, well, then don't hold cash. But why is gold the answer? I mean, stocks go up by more than inflation long term. I don't know why cash is the answer, or is the litmus test, right? Anyway. Okay. What else? We got 4 minutes. So I watched Department Q, loved it. I think it's the best show of 2025. We're watching Blind Spot, and it's funny. I would give it a B minus, maybe. I mean, I like the idea behind it. A lot of puzzles they're trying to solve with these tattoos on this person. This what's her name? Taylor. Is that her name? Taylor Shaw? Something like that. They just call her Jane. Anyway, it wasn't until the other day that I realized it's been on for 5 years. There's been 5 seasons of it. We're just in season 1. I don't know. It's okay. We're watching Stick, which is good. Not great, but I enjoy it. What shows should I stream? Any suggestions? One person emailed me about Bosch and Bosch Legacy. I've seen them all. They're fabulous. Love them. Josh says, if there is uncertainty about my job due to company buyout, should I increase my emergency fund temporarily, even if I have a decent sized emergency fund already? Well, Josh, here's how I would think about it. How long would it take me to get a new job? Now, you might not have a definitive answer to that, but you probably have some idea. And how long will your emergency fund last you now? And if you're having some angst about that right now, I would listen to that gut feeling. I wouldn't let it overtake me and make the final decision, but it could be telling you you're not quite comfortable with the amount of time your current emergency fund can buy you. Now, you may think about it and say, well, no, I'm probably just overreacting, or not, right? But that's how I would think about it. What's your industry? Where do you live? If you're someone that can manage AI, you can get a job anywhere. If you're a computer programmer, you might have trouble right now. And if you want to work for the government, you probably got a lot of trouble finding that job. So it depends where you are, what your field is. But that's how I'd be thinking about it. How long of an emergency fund do I think I'll need? And if the answer is, I don't know, it's hard for me to decide, then another thing I would then think about is, when will you know about the buyout? Now, your answer to that might be, I don't know. It could happen anytime or not at all. I don't have a clue. But if you said, well, I think we'll have a good idea in 3 months, I'd probably say, yeah, save some cash for 3 months. If at the end of 3 months there's no buyout, or there is a buyout and the buyer wants you to come work for them, or there's a buyout and you lose your job, but you get another job right away, you can always invest the 3 months of cash at that point. Those would be things I'd be thinking about. All right, 8:29. I'm going to scroll to the bottom. I know I don't get to all of these. We do keep track of these chats and try to circle back and answer as many questions as we can. You can obviously, when you get the newsletter, just hit reply. Eventually ChatGPT or Claude will draft a reply and I'll review it. I may completely scrap it and rewrite it. It may be a great reply. We'll see. What I'm going to do once I get that thing built is I'll actually demo it for you. Maybe I'll just do a separate video or part of a live show. I'll show you how it's working. I'll put some test emails through like I did tonight with the one that I just dropped into ChatGPT. Obviously, I'll scrub it of any names or email addresses. I don't put any of that. Like when to get a reply, I don't need to. I just need the text, of the reply. So anyway, that's it. So this will be the last question. This is a good one. Can I beat AI in chess? I certainly can't beat a computer in chess, but that's obvious because Magnus Carlsen can't beat a computer in chess. I don't know. Let's play a game of chess. I'll go first. E4. It's thinking. Oh, this gave me a board. Okay. Knight F3. D6. D4. It's putting, this is the move I would make, but I don't think it should be giving me my next move. That is what I would do. What do you mean it's not legal? Oh, it moved for me. Okay. Wait a minute. No, it played knight F6. No, knight D4. Yeah, see, it's already, am I missing it? I've replied with C4, King center. Becomes after knight D4. Okay, well, that's what I would do. Wait a minute. Oh, I see. This is weird. I don't know what it's done. It has a knight on C4. Did I type in C4? Yeah, so I've already lost the thread. I don't know if I made a mistake. I'll have to go back and look at the thread. I put knight D4 in. You don't have to put the little X, knight takes D4. You can. Anyway, I don't know, Dave. I don't know. I'll have to go back and look at the thread, but I think it started to make my moves for me, but it's got a knight on C4. So I don't know why there's a knight on C4. See, if you look here, this knight right here, I don't know what it's doing there on C. It's C4. I don't know why it's there. Anyway, so I don't know if I would win or not. Probably wouldn't. All right, gang. Well, I hope you have a great week. Yeah, if you want to ask questions, just reply to the newsletter. I didn't respond to any of the emails from yesterday, but I will get to them. I'm trying to get this tool together. And again, I'll be in the process. I'm not going to just let AI send you a reply. And if I ever did that, I would tell you in the email, but I have no plans to do that. So just keep that in mind. And I guess that's it. Hope you have a great week. If you have any questions, like I said, you know how to reach me. Hope you have a great week. And until next time, remember, the best thing money can buy is financial freedom.